Hey everybody, this is Alex Merced from alexmerced.com. And if you guys have been enjoying any crypto commentary I've done, whether it's been on my posts, blog, through my podcast, the Bitcoin Blockchain Crypto Podcast, I'm housing all of this stuff over there at bitcoinblockchaincrypto.com. So basically, it'll be much easier to find anything I do in this space there. Okay, and I'll be adding more stuff and trying to bring you useful information so that way you can make decisions about this sector. And yeah, so check that out. And if you want to help support building that out, there are ways on the website to show you how you can help support the effort. But bottom line, what I want to talk about today was the future of cryptocurrency. So now basically we're wrapping up 2017. Today, which is December 22nd, there was a fairly decent crypto sell-off. Looks like it seems to be reversing and going back up now. But it was a pretty scary moment for many who are kind of new to this, who maybe bought at some of the highs. But does that mean, like people were saying, oh look, it's over, we knew it was going to crash? It dropped a lot, but again, it's still technically a bit above where it started out the month. Just shows you how crazy a month it was. And which is sensible, because you had a lot of people who didn't know about Bitcoin before going into it, and that kind of drove up the price to some very strange highs. Doesn't necessarily mean that we'll never hit those prices again, but it did get there kind of quick. Now going forward, there's a couple things to mention about sort of the crypto market. So when it comes to Bitcoin, what we realize is that Bitcoin can only handle so much transactions in its current state. Meaning, what happens is that as more and more transactions happen, and you end up having higher transaction fees, and you end up having to wait longer for those transactions to be confirmed. Now, there are things in works to fix it. One of the things that they did this year was what was called segregated witness, which would actually speed up those transaction times. So a lot of people transact on Coinbase, and as I understand it, Coinbase hasn't actually activated SegWit for their transactions, which is why some of the transactions are higher on Coinbase, or fees are high on Coinbase, where they may not be as high as other places where they may have already activated segregated witness addresses, or addresses that can take advantage of that technology. But as that, more people start using SegWit on Bitcoin, transaction fees will come down. Later on, they're developing something that should be deployed sometime in 2018 called Lightning Network. Basically, from what I understand, this is going to create another layer to help do transactions, so that way basically it's another layer handling small transactions and throughout the day kind of transactions, so that way at the end of the day you're essentially handling sort of net movements, sort of creating a settlement layer. And I think this has interoperability between blockchains, so more than just the Bitcoin blockchain can take advantage of the Lightning Network. I still got to read up a little bit more on exactly how it works, but that'll also make transactions faster. So there is technology coming out, and it'll take time for it to proliferate to make Bitcoin transactions cheaper, faster, etc. So in the meantime, there'll still probably be demand for Bitcoin Cash and Litecoin, which both already offer lower fees and faster transactions, but don't necessarily. SegWit and Lightning offer logistically some benefits that will be beneficial to blockchains that embrace it. Okay, so in the long run, Bitcoin will resurge as those technologies kind of get embraced. There's still always the market for privacy coins. People still need a solid way of delivering private transactions. The big names in the space are Monero, Zcash, Dash, Eon, StealthCoin. So basically, you're going to still see a lot of demand for that and a lot of competition between those. Does that mean there's just going to be one winner, one private coin? No, there'll probably be a niche for each of them. They'll find their markets, but that market is going to continue to be developed. And we've also saw this year with things like CryptoKitties, there's just so many different decentralized applications, token issuances, smart contracts being handled by the Ethereum network. Because that's what Ethereum's goal wasn't to be a currency, but to be sort of this massive decentralized computer that could process decentralized apps that could be used for issuing tokens and keeping track of things on a ledger, that could be used for smart contracts, so that way you can make arrangements with other people that are held on this sort of network with integrity, or was usually referred to as a trustless network, meaning you don't have to worry about trusting the other party because you have all these different people involved. So But the thing is, there's so much of it going on now. Ethereum is starting to kind of get chuggy, starting to see slowness in transactions, kind of like what's happening with Bitcoin. So what this tells me, it's not that they're necessarily that's the end of Ethereum. It's just that there's a demand for changes on Ethereum as far as how it handles transactions, but also a demand for other platforms for people to create decentralized apps, tokens, smart contracts, etc. So I see lots of room for people to embrace things like NXT, ARDR, Ardor, Waves, Expanse, which is a fork of Ethereum, and several of these other sort of platform tokens, BitShares, EOS, where people can create decentralized apps, tokens, smart contracts on those blockchains. So again, the blockchain space is a lot more wide and vast. And another thing about Bitcoin is that you have Omni that exists already that lets you kind of create assets through the Bitcoin blockchain in a way. So basically you have this Omni layer which keeps track of assets that are created, but when you send them to someone, you're really sending them to their Bitcoin address, and then Omni layer just keeps track of your stuff on the Omni layer through your Bitcoin address, so it kind of is a layer on top of Bitcoin. Rootstock, or RSK, is another such layer that's going to enable the creation of decentralized apps, tokens, and smart contracts on top of Bitcoin. So when you add that functionality plus Lightning Network plus SegWit, you have a lot of the things that people have, a lot of the things that people would want to see in Bitcoin happening over time. Okay, so that's another thing to take into consideration. But otherwise, as far as the technology goes, there's still more applications being found out. I keep reading about a lot of these enterprises, these centralized apps that are being built on Ethereum, and a lot of these other outlets, and some of the new blockchains, some of the new things that are going out. It's going to be a pretty interesting space, and I'm very looking forward to 2018. Do I expect more sort of huge spikes and huge dips? Probably, because again, it's not a technology that most people understand. That's what I'm trying to do, educate people. So if you enjoy what I'm doing over there at Bitcoin Blockchain Crypto.com, educating people, please consider making donations, supporting, so that way I can continue to do so and just continue educating people. Because I'm not trying to give investment advice. I'm not a trader. I'm not some hotshot investor. I do understand financial concepts and want to help people take financial concepts, cryptocurrency concepts, and be able to understand it better, so that way they can come up with their own decisions and understand things better. So my name's Alex Merced from alexmerced.com. Have a great day and enjoy, and happy holidays.